Good afternoon, everyone. Thank you for attending our webinar series today. My name is Tyson Mavar. I'm one of the ConocoPhillips focused retirement advisors for the retirement group here in Texas. And on today's webinar series, we're going to cover the ConocoPhillips pension plan, specifically up-to-date interest rates that affect the pension lump sum payouts. For those of you who aren't as familiar with our company, the retirement group is an independent financial planning organization that specializes in working with corporate employees in an effort to help folks plan for and transition successfully into retirement. We also manage retirement assets for clients, many of whom worked for ConocoPhillips, some of which still work for ConocoPhillips, as well as a variety of other Fortune 100 companies around the country. And our hope is to help you and people like you create a successful retirement, whether or not you decide to do business with us. We have a whole host of complimentary services that we encourage you to take advantage of. The most important of which is the cash flow analysis, where we'll take your current benefits, project out probability of success on your retirement, and also identify some things that you might want to consider doing now while you're still working to improve the tax efficiency of your plan and the overall probability of success in your retirement plan. If you haven't taken advantage of this exercise yet, or if it's been a while since we've updated your retirement analysis, please let us know so we can put this plan together for you. We'll review it with you either in person or via web meeting, whatever is most convenient for you. And we try to update that periodically. As many of you know, there's constantly changes in tax rules that affect retirement accounts, changes in benefits plans, changes to the interest rates that affect the pension, like we'll talk about today. So let us know if you have some interest in spending some time with us. It's complimentary. All we ask is if you get some value out of this exercise. Even if you don't consider doing business with us, we hope that you at least have some good things to say about us and refer us to some of your coworkers at ConocoPhillips. We also have a LinkedIn page where we publish these live webinars going over a variety of different topics, some of which are specific to the ConocoPhillips benefits plans, some of which is generic retirement income planning and tax planning. So take advantage of that website as well. Follow us on LinkedIn if you aren't doing so already, and it's a great place to get started on your retirement planning journey. I'm going to zoom into this slide here. We're looking at the interest rates that affect the ConocoPhillips pension plans. As many of you know, there's a variety of different plans. So we're going to break this down into the most common plans that we run into with the clients that we service from ConocoPhillips. If you are on the cash balance plan, it typically means you either started with the company after 2003 or you chose strategically to switch to the cash balance plan from one of the old heritage plans. It's possible you have two pension plans from ConocoPhillips, and each one is going to be affected differently by these interest rates. What we're looking at on this table is the corporate bond interest rates, also known as first, second, and third segment interest rates. And those affect the defined benefit plans, the formula-based plans from Heritage Conoco employees, Heritage Phillip employees, and Heritage Burlington employees. When interest rates go up, the lump sum benefits on those plans are going to go down. And how they are calculated is a function of not only which company you started with, but also the years of service you have. So these first, second, and third segment rates we talked about, they're based on corporate bonds, and those interest rates are updated monthly by the IRS. The company is going to look at the fourth month prior to the month that you commence your benefit to determine what interest rates to use to calculate your lump sum. They're also going to potentially use 30-year Treasury bond interest rates. If you have service prior to 2008, they're going to use this 30-year Treasury bond, which is lower in almost all cases than all of these corporate bond interest rates, which means that it produces higher lump sum payouts. So your service prior to 2008, year by year, is actually going to produce a higher lump sum. And if you were a Heritage Conoco employee, there's a third segment of your career that's looked at specially. It's different than anybody else at the company, and that's using an interest rate that's not even shown here called the PBGC rate. That rate is actually 2.25% right now and was as low as 0% just over a year ago. And that's for service for Conoco employees prior to 2000. So what we found is that the Heritage Conoco employees, assuming they have a equal salary and equal years of service, have the best lump sum payout because of this lower PBGC rate that's affecting the early years of their career and the pension plan associated with those years. Now, the 30-year Treasury affects every pension plan that we run into or talk to folks about. Even the cash balance plan, for those of you that either switched over at 2003 or started your career after 2003, you're going to be on this cash balance plan that grows as a function of your salary credits as well as interest credits that are based on this 30-year Treasury. So rising interest rates are actually a good thing for folks that are on the cash balance plan because the annual accruals are going to be even better. Unfortunately for everybody else, everybody who's on a defined benefit plan, which is most people, especially if you started your career prior to 2003, rising interest rates actually hurt your lump sum. And this is why we pay so close attention to this monthly changing rate, because it could make or break your retirement, and it could also identify what's going to be the optimal time to leave the company. We've actually encouraged people to leave earlier than their original plan in an effort to save hundreds of thousands of dollars in some cases. Now, if you are a Heritage Conoco employee, we talked about that PBGC rate. It's going to produce a higher lump sum. If you are a Phillips employee, both ConocoPhillips and even Burlington employees will use this 30-year Treasury rate for years from 2000 up to 2008. And for Phillips and Burlington employees, they're also going to use that rate for years of service prior to 2000 to calculate a lump sum. And everybody that's on the defined benefit plan, Conoco, Phillips, and Burlington, is going to use these three corporate bond segment rates for their years of service after 2008, including your current years of service as you continue to work with the company. Now, see that these corporate bond interest rates are higher, producing lower lump sums. And what's also very important to remember is that the second segment rate has the greatest impact of these three segment rates. The way that they observe these rates is that the first segment rate is going to discount future cash flows of the first 5 years of retirement. The second segment rate is the next 15 years, or years 6 through 20 specifically. And the third segment rate is years 21 through life. For most people, that second segment rate is 3 times more relevant than both the first or the third segment rate. Usually accounts for about 60% of that portion of the calculation. So you can see there's a lot of moving parts on this. And the easiest way to see what an impact these interest rates are going to have on your lump sum calculation is just by running a pension projection through the benefits website. You can model different retirement dates. You can also model different assumptions on all of these interest rates. And we encourage people to plan conservatively because we cannot predict what's going to happen to these rates. And especially if you're paying attention to this within the last 2 years, you would have seen how significant an impact rising interest rates can have on your retirement plan, especially if a big portion of your plan revolves around this pension from ConocoPhillips. For instance, we have a client last year, a pension plan that was projected over $2 million. They lost about $300,000 in 1 year's time on their lump sum, which in their case, they actually decided to retire in an effort to avoid losing that money. And that's certainly something we want to be aware about, at least, to make a good decision on that. And maybe not just retire, but just change jobs. Take your pension out and go work for another company, or maybe just do some consulting. That's a great way to transition into retirement, we've seen for a lot of our clients. But you've got to understand the impact, and we also, if maybe you can't afford to retire, you're just not psychologically ready to leave ConocoPhillips, it may just mean you need to consider saving more in your 401k, or maybe working a little bit longer to make up for losses in your pension that resulted from a rising interest rate environment. You can also see how much these rates have gone up just in the last less than 2 years. You can see that second segment rate was 2.26 back in December of 2020. And here in March of 2023, it's gone up more than double. It's gone up almost 3 percentage points, which translates to roughly a 30% drop in lump sums. Every 1% increase results in about a 10% drop in a lump sum. That's also a function of your age, and the younger you are, the more severe an impact of rising interest rates has on your lump sum. But a very good reason to spend time in the benefit modeler, and we'll go through this exercise with you when we run your cash flow analysis. Model different retirement time frames. Also model different pension payouts. Lump sum might not be the best way to go, and you want to understand the benefits as well as potential detriments of various pension options, and run lots of different scenarios. Spend time with your family understanding the implications of changes that will impact your retirement plan. That way you're prepared to make the best decision possible when the time comes, whether it's to raise your hand to take an offer to leave the company, or you don't get to choose your retirement date. We've seen that for some of our clients in the last 10 years. Or ideally, you get to pick the best possible day to retire. Whether or not you get a severance package, you want to make sure you optimize what you're taking out of your pension plan, and understanding these interest rates is critical in being able to do that. Unfortunately, statistically, 74% of Americans over the age of 50 do not have a written plan for their retirement. As far as we're concerned, this is not acceptable, folks, and there's a variety of companies, including ours, that will do this for you on a complimentary basis in an effort to get to know you, effort to allow you to get to know them, and see if there's a good fit for potentially doing some business after you leave the company. There's no expectation to do business with us if you have us run this plan for you. All we ask is that you help us grow our business by recommending some of your coworkers talk to us if you get value from this exercise. So let us know if you'd like to have us run this retirement plan, or if you have any specific questions related to the ConocoPhillips benefits or about your retirement strategy in general. Feel free to reach out to us. Our home office phone number is 800-900-5867. Our phone number at the home office is, our email is info@theretirementgroup.com. And you can also schedule a meeting with myself or one of my colleagues that focus on the ConocoPhillips benefits plans by taking a picture of this QR code to get onto one of our calendars, even if it's just for a quick 5 or 10 minute consultation. Or if you'd like to have us run this report for you, we're happy to do so. Just let us know. With that, we're going to wrap it up for today's webinar series. Thanks again, everybody, for joining us today. Everybody have a good, safe rest of your week, and we hope to talk to you all very soon.